In this video, traders, we're going to look at ways to trade the market if you are short on time. Stay tuned. Hey guys, this is our channel sponsor and partner. If you want to check them out, you know the drill. There's a link in the description below. If you haven't checked them out yet, I know many of you have. Many of you decided, hey, they're a good broker. I like to move my funds over to that and use those. I'll have them as a backup broker just in case. Or, you know what, maybe there's something to look at later on down the line when you're ready to do something different. So anyway, check them out, guys. Good guys, are obviously regulated and all that other good stuff. Now, one thing that is a challenge for many traders is the fact that you can't be there all the time, right? If you're part-time, you run a business, you've got a job, you've got this and that, other commitments, you can't be there all the time. So here are some ways that you can trade the market still if you are short on time. The first one is use expert advisors or EAs. Now you can use these on MT4, their MT4 platform. Obviously they're MT4, but you can use it on their MT4 account. And you can trade EAs. So what does that mean? It basically is an algorithm or a robot. Now, sometimes robots get bad names, but there's plenty of kind of good systems out there that you can buy off the shelf, you can code yourself, and then you can adjust and adapt. And actually, speaking to Chris Weston a while ago in the interview, one of the things he said is the biggest growth areas to see a lot of people who are taking these expert advisors and adjusting them and kind of configuring them for their own strategy and then plugging those in and running them. Now, the beauty of running one of these is that you don't need to be in front of the screen. As it's an algorithm, it's basically going to execute for you. You put your risk parameters in, you put everything in to protect your position, and it will sit there and trade away, and then you'll work out whether you've made any profit, whether you've made a loss, how much, etc. So you don't have to be in front of the screen. Once you've done the legwork of building the algo or adjusting the algo or tweaking the algo, then it's ready to go. Okay, number two is to use a strategy that doesn't need you to be glued to the screen. Now this kind of segues in a little bit, I guess, with point 5. So let's put them together here. Trade on a longer / higher time frame. There's still subtle differences. So if you're trading on a higher time frame, it means you're not trading on a 1 minute chart, right? It makes sense, you haven't got the time. But you're trading on maybe a daily chart. But the strategy is also important, because if you've got a strategy that has constantly adjusting positions, you may be on a daily chart, but you still may be holding positions for kind of 2 or 3 days, 10 or 15, 20 positions. That means you're constantly adjusting and tweaking. That's still going to create a lot of time. So you have to have a good sweet spot of the two here. You have a strategy that doesn't require constant adjustment. Maybe don't trade a lot of positions. Maybe you're not kind of trading a kind of pair strategy that's constantly requiring adjustment. Or that could be a good idea. You know, pair strategy, trading one against the other, not a currency pair, but be FTSE against the DAX, S&P against the NASDAQ, and trading that kind of correlation is a kind of good longer term thing to consider. But really, you don't want to be constantly meddling with stuff. And also, you don't want to be on a really low time frame, you know, like your 5 minute, 15, because you haven't got the time for it. So daily charts, great. And something that requires your input, whether you're adjusting a position, whether you're moving a position, whether you're taking a position, whether you're analyzing it, far less time during the week. And number 3, trade less volatile instruments. And why is this important? This is important because, guys, we're human, right? If we are in a market that's moving very, very aggressively, we are going to want to check it. If we're in a position, we want to check it. It's harder to not check it and leave your limits and stops just to be taken out than in a kind of volatile market than is a quiet market. Why that is, I mean, it's obvious, because you think, oh, I could be making a lot of money, could be losing money very quickly. So take the pressure off yourself. Trade something that's less volatile. Like at the moment, guys, a lot of the currency pairs, some of them are less volatile. They're chugging away, they're ping-ponging back and forth from a range. Perfect kind of strategy for people who can't sit in front of the screens, don't have much time. Placing orders at the top of the range, placing orders at the bottom of the range, protecting it with stops, and just ping-ponging that range back and forth. You know, the markets have been sitting in for months and months and months in these ranges. When they break out, you might get stopped out finally, but you might have 10 good trades under your belt, but they're trades that take time. They're not going to be swinging wildly. So something to consider is the volatility of the instrument. If you're trading something that's really, really going crazy, you're going to want to check, and it's going to suck your time away from from other things you're doing. The 4th thing, guys, and this is the final thing because we covered the 5th thing before, is trade a market that is open for longer. So why is this important? So If you're trading, a currency pair, your Forex 24/5, quoting that for you all throughout Monday to Friday, and also as well with certain indices as well, they'll be quoted with little gaps and stuff. But they're open a lot more than say a select few US stocks. Some US stocks have a specific opening window, and you can only execute your orders during that window. So if you don't have much time, then selecting something that's open for longer, some of the commodities, some of the indices, some of the currency pairs, that means you have the ability to adjust your orders, to place your orders, to place your trades at any time, much more kind of wide array of time. So 2 o'clock in the morning for you, that's the time you've got to analyze your positions, put your limit orders in, etc. You can do that if you're trading GBP USD or GBP JPY. You can't do that if you're trading Apple, for example. So something to consider, and based on how much time you've got to allocate, thinking, hey, how long is this market open for? It's open for longer, I can maybe use that. So if you are short on time, guys, Algo's Expert Advisors, great way to kind of trade for you, buy off the shelf stuff, code them yourself, get someone to code them. Using a strategy doesn't need you to be glued to the screen. Trade less volatile instruments, trading market is open for longer, and of course this segues into that one, which is trading on a higher time frame. So links in the description below. Take care, keep your risk managed, whatever you're doing, and I'll see you in the next one. Bye bye.